It is Wednesday, time now for Mike on the Money, and here's a look at the closing numbers yesterday. It has been quite the week. The markets, of course, are closed today to celebrate Juneteenth. They're taking a breather after reaching new all-time highs this week. You can see the reaction there from the people as they look at those numbers. So let's take a moment this afternoon to talk through how you should position your portfolio. All of that, given that information we just gave you. Mike Giordano, financial advisor with Williams Wealth Management, is here. Thanks for being here, Mike. So what has been driving the market to these all-time highs?
Yeah, it all comes down to AI, market highs in AI. It kind of rhymes, right? Perfect. But you know, one of the things that's interesting about the markets is that there's two basic stories that are happening over the last year and a half. One story has been interest rates going up. We expect that to hurt the economy, slow things down, possibly push us into a recession. Definitely not good for the markets. On the other side, you have this AI story that started with OpenAI about a year and a half ago, and the expectation there is it's going to boost corporate profits, make things more efficient across the economy. Good for the market. So you have these two stories. The interest rate one became a snoozer as the economy didn't fall apart, and so the AI story is the one that's been driving everything.
But AI does seem to be centered around just a few companies, though. Do they have that much influence on the overall market?
They do it depending on what indice you're looking at. Not necessarily the Dow Jones, but the S&P 500, which is the broad market, is weighted based on how big the companies are. So if you went to your favorite pizza joint and bought an S&P 500 pizza, they would slice it up into 500 slices, but there would be three massive slices there for NVIDIA, Apple, and Microsoft. They'd be your New York style slices that you got to like fold up to eat. And because of that, yes, whatever they do, up or down, they have massive influence. And what's really fascinating about these companies for the first time in history is the law of large numbers doesn't seem to apply. Even though they're massive, they still grow at faster than market rates simply because of technology and how powerful they are.
Wow. Now, is this concentration in the markets a problem for investors?
It depends on where you are in your investment journey. If you're a young investor, you just got started, you don't have a lot of money in the markets, and you've got lots of future earnings that's going to be future investment, it's not as big of a deal because things are going to smooth out over time. If you're an older investor, you're ready to retire, you got a whole bunch of money in the markets, you don't have a lot of those future investment opportunities, then you need a lot more risk mitigation. So you need to start thinking of ways in which you can maybe not have such a high concentration on just a handful of stocks.
Overall, if investors are worried about this, how can they protect themselves?
A couple different ways that they can do it. If you have the opportunity to have IRAs, Roth IRAs, brokerage accounts, you have a whole bunch of investment opportunities there, and you could actually buy one of those S&P 500 pies that cuts up the pieces in 500 pieces that are all exactly the same. And so you can mix and match that with a regular S&P 500 fund, and all of a sudden now you have a situation where you have less concentration. If you don't have that opportunity, you have a lot of money sitting in a 401k, you don't have access to be able to move that 401k, there's not as many investment options, you still may have some sort of an active large cap fund in there, and you might be able to pair that with an S&P index fund, and now all of a sudden you get better risk parameters because that active fund may have a little bit more balance than the overall S&P 500.
Wow. All right. Well, thank you for your insight. AI. Wow.
AI and pizza. So now you're going to go out there and you're going to order that S&P 500 pizza, and you're going to say, give me it with extra veggies.
Extra veggies.
Yes.
I can fold it up and enjoy it.
Perfect. I mean, you can just salivate. I'm salivating right now. I want to be on, West 57th right now.
Making us all hungry.
Yes.
Mike Giordano, financial advisor with Williams Wealth Management. Thanks for being here as always.